In today's video, we continue our conversation about easy wins in personal finance. What's the low-hanging fruit that we can accomplish that's going to put us in a better financial position going forward? Today, we're specifically going to talk about cleaning up old life insurance policies. Why would this make such a big difference? Well, we'll answer that question and more coming up next. All right, Janine, so we got to clean up old life insurance policies. It sounds like an incredibly boring task to have to go out and do, but if it's going to move the needle for me financially, I want to go do it. So talk to us about why that's kind of this important thing that could help somebody's financial situation.
Well, one, I think people need to collect or take a look at what their policies are. What kind of policies do you have? If you have term policies, when does it term out? Because chances are, if you have something that's going to term out in the next couple of years, you need to be thinking about, do you replace it? And if so, with what? What should that look like? A lot of people have old whole life policies, depending on the company or the type of whole life policy. It could be a participating policy or not. If it's not a participating policy, it really hasn't grown any, and it's probably a smaller policy. So is it worth keeping? Depends. If you're just looking, and a lot of people have done this, they bought it originally, okay, this is my, for lack of a better term, death insurance, it's going to bury me. So I go, okay, it depends on what kind of funeral you want and where you're going to be buried, because you need to look at those costs. But old life insurance policies need to be evaluated. You'll need what's called an in-force ledger that tells you how the policy has performed. Is it worth keeping? It depends on what your future goals are. Typically what happens is you buy insurance in the early years, and that's income protection for the family. In the middle years, it's asset protection. So if I have it in place and I've planned properly, I could use it for college planning or college tuitions. I could use it for investments, other outside of insurance. So it becomes asset protection in that it takes the pressure off your investments, while you're in retirement. Then if something untoward happens, you have this windfall, if you will, of income tax-free cash. In later life, it's an asset protection, an estate planning protection. What's happened with the Secure Act is non-spousal beneficiaries, that would be your kids, most likely, have 10 years to move the money out of an IRA that they might inherit. Well, that could result in a lot of tax. So if I have insurance on the books where the kids get the proceeds, they can pay the tax. So there's some really good planning that should be done, especially for people who have large amounts in qualified money. That would be IRAs, 401ks, etc. If you have that, you need to look at keeping life insurance on the books. Then the question is, who should own it? Obviously, if you're not the beneficiary, if you're the owner of the policy, who's the beneficiary? You have to go back and look at who the beneficiary you currently have on it is. Is that still the person you want to get the proceeds? So a lot of times it's the spouse, that's 100% beneficiary, primary, and then the contingent beneficiaries would be the kids or a trust. So there's a lot of planning that can be done with life insurance as it moves through stages. And it's really important that people take a look at that, because the reason for having it changes.
It's a great point. And I think that's something we should all be thinking about. Is it really sounds like a matter of efficiency. We clean up these old life insurance policies and we can experience better efficiency in a ton of different areas. So it's not this just one little tiny issue, but something that can then have kind of arms that affect all parts of your financial plan.
That's right. And having, some people have forgotten they've had policies and then they've all of a sudden found them. So it's really good I have had some folks, in fact, a couple of brothers were saying, do I need this anymore? I go, well, in your case, maybe not. Ask your wife.
I love it.
Because, when you get to the end and here's the problem with term policies, it's really meant for a specific amount of time. What happens at the end of the term is people usually end up, canceling the policy because the premium goes up exponentially because it's meant for a term. And then at that point, you're risking, are you still healthy and you don't have any underlying health issues that would cause you to be rated and any further premiums be more expensive if you got new insurance. So it's always good to review why you own it in the first place.
Yeah.
What is, what's the tool? And then do I need other tools? Do I need to replace this tool? Because it doesn't work for me now. So.
Great thing to review. You can see why that's an easy win in personal finance, because all really it is just kind of getting organized and just a quick check of current need, and then that can unlock all these other great financial opportunities. So
right.
If you have questions about that and want to meet with Janine and talk a little bit about maybe some old life insurance policies that you have, whether they're still appropriate, how that money, if you're still contributing to them, could be used more effectively, if now's the right time in your life to make that change, go through the planning process. It's very easy to do that. You can schedule a free visit with Janine from wherever you are by going to theuswealthadvisors.com. That's theuswealthadvisors.com, or call 443-718-6311, and we'll also put the contact info in the description of today's show in YouTube, so you can find that very easily. Don't forget to hit the like button if you enjoyed today's content, and subscribe for notifications on future videos. And Janine, we thank you for your help and guidance, and we'll see you on the next episode.
Thanks so much, Walt.
All right, we'll see everybody next time for part 3 of our Easy Wins conversation next week, right here on Rockin' Retirement.